Okay.
So
I found this chart, this price chart your team put together. Very interesting when it comes to the Brent oil price year to date, and again, but more importantly, the outlook. Over the next 1, 2, 3, 4, 5, 6, 7 years, 2019, 2025. And if that could just come up on screen right now, it shows this that we've been a little bit wobbling when it comes to the Brent price year to date over the last. This month, to be precise. But again, it's been a little zigzag, a lot of volatility there. But again, the next chart was a little bit more about the forecast that we find if we're looking at $72 a barrel in 2012, and we're looking at $74 per barrel this year. Okay, then I will see there is a bit of what you call the skyfall. To $69 by next year, and then it's going to stay in the $60 up-end region to 2025.
So that's our estimate essentially, and we've considered several factors. So now we have the US has come into the market. They are here to stay. They have actually overtaken even Saudi Arabia. You know, they produce 17.8 million barrels. So they are the #1 oil producer in the country, in the world rather. So, and that's significant. And the US is not part of OPEC, non-OPEC agreement. That means they can decide to up their production,
do whatever they like, and every time they just wake up.
Essentially. So you already have a part of the oil demand that is already being met. So as a result, the chances of oil prices actually rising to the highs of $80 that we had is a very
it's far-fetched.
Yes, it is.
So because we're looking at on the second chart on the right-hand corner of the screen is that there's nothing like 80 in the foreseeable 1, 2, 3, 4, 5, 6, 7 years.
It's
going to be very hard to get.
I like the fact that you actually mentioned foreseeable. So that is what is always determining our forecast. But as I mentioned earlier, there's always the measurable impact of geopolitics. You know, different negotiations, war, anything that could affect supply could actually impact oil prices for that. But the likeliness of that happening is actually very, very minute. So we do not see oil prices rising to the region of $80, at least not in the next 2-3 years.
Okay, let's take it a bit back home and talk about Nigeria's oil and gas. Oil and gas is very, we have a very weak, suboptimal energy sector combined with electricity and all of that. And we cannot divorce or take oil and gas out of our energy conversation. So we need energy, we need gas. So we'll talk about gas optimization, we'll talk about gas utilization, we'll talk about gas flaring and all of that in that particular space. What is it that you guys have as far as that industry is concerned? And if we have any way out of this quagmire in which the power generating companies don't get enough gas, we're selling gas up there because the power sector pricing, so that sector pricing is left for market dynamics, and everybody's looking for the best price for every cubic of gas.
Yes, you're actually correct. So one of the major impacts of legislation essentially is to actually allow market prices, especially for gas, to reflect the realities of the market, you know, essentially. So we do not have non-associated gas operators in the market. What I'm saying is we do not have investors who have come to the market solely to invest in gas. And that's as a result of the fact that
not doing extraction.
Yes, it's solely for gas. We do not have, you know, but we have
every investor is an
essentially
operator.
Every investor is an operator. So what we have essentially of our gas production is basically associated. And when you look at our resource, which is about 187 trillion cubic feet, and what we're producing right now, we are not even scratching the surface.
That's the very interesting multicolored. Was that what they call a pie chart? Yeah, that's a pie chart. I still remember those days. Yes, it's a pie chart. The green one is the 41%, right?
Yes.
So look at exports, industry, power, flags, reinjected, producer, internal use. Explain that.
So essentially, what we're saying here is that we have a higher percentage of our gas production actually for exports. I mean, LNG.
Which is the 41%.
Yes. So
that's green. That's in dollars, right?
Yes.
Yeah, dollar is green.
Yes.
Okay, go ahead.
So, and I mean, that has been one of the cash cow for government, and we know that's not going to change anytime soon. But we believe that other the percentage of gas production actually accrued for other sectors could actually increase. That is, if we increase our gas production.
What's the percentage of industry here? It's much small.
Yes, it's quite small.
Yes.
I mean,
that's the one in black, isn't it?
Yes.
That's about just about 10%.
Yes. So our installed capacity right now, power generation is 12,000 megawatt, and we know that we do not generate up to that. not to talk of the fact that we have a significant percentage in terms of stranded power. So what I'm saying in essence is that the percentage of gas production that is actually allotted to the power sector is actually small.
Let's talk a little bit again before the conversation, the time gets over, about the industry players.
Okay.
And some of us were quite happy, as it were, in recent years when some of the indigenous oil and gas companies start going in there and picking up some of the assets being thrown onto the market by Shell and a few others over the last 5-7 years. And banks who went into this business. And we now saw the emergence of oil and gas firms like Seplat that's making Nigeria proud, listed here on the London Stock Exchange. One of the companies listed recently by the London Stock Exchange as companies to inspire Africa, which was just a few weeks ago. And we are very proud that we saw Seplat Nigeria as a major case study for companies to inspire Africa at the London Stock Exchange. And that was good news for Nigeria just about 3 weeks ago. So that was good. So let's talk about this particular company, which is the only EMP we have on the Nigerian Stock Exchange.
Yes, essentially.
What's the case study? What's the business? The profits, return on investment case for Seplat.
So essentially, as you've mentioned, they're essentially the only full-fledged exploration and production company operating in the Nigerian space, and with the dual listing on the Nigerian and the London Stock Exchange. Over the years, Seplat has been very meticulous in terms of maximizing their assets, their oil and gas assets. What we've seen is that upon every annual production and operation experience that they've gone back to the drawing board and they've re-strategized. I'll give you an example. So post-2016, when they had the Focados issue, so one of the challenges that they had been looking to overcome had been to diversify their exports, which is actually a major concern for investors. And we believe that, by the time they release their full year 2018 report, it should follow a positive announcement with regards to a completion of one of their oil pipelines, which is the Amukwe to Escravos pipeline.
Very interesting if you look at the oil and gas revenue that you guys have on this bar chart, and if you just bring that up from the production room and look at the 2011 to 2017 numbers, as it were, and you see the contribution, of crude oil. Vis-a-vis gas, and you can see at the top there for our viewers, you can see the green is the oil revenue, and the little topping there in orange is gas. And that is keep increasing. Gas is increasing in terms of revenue, pressuring oil revenue a little bit down.
So one of the...
so there's a change of dynamics here.
So one of the diversification strategies is to invest more also in their gas assets. So they have two major investments along that line. We have the Oben, which is one of their OMLs, and then we also have the Ano gas project. That is in conjunction with... so that's on their OML 31 actually, and then it also involves Shell. So what we see, and that's a major gas project, what that will do is that they'll be able to produce up to 300 million SCOF, and which would afford them to effectively supply the domestic market and also export to West African countries. So we're seeing Seplat taking early mover advantage of their gas infrastructure by investing year on year in their gas asset and looking to optimize production and also export. So essentially they are putting, and this is the reason why we actually came out with the title of the report, which is actually wind in the sails. So what you're looking at is they're looking to complement on their successes and also gather momentum, taking advantage of the opportunities as they come. Now, one of the major challenges for gas production historically has actually been the evacuation of gas from the east to the west, because west is where the demand is. Right, so
the eastern part of the country,
yes, to the west. Yes, so
and the west is where the industries are.
Yes, the west is where the industries are.
A little bit of the heavy industry.
Yes.
Lagos, Ogun,
and the
the
commercial.
Commercial.
Yes. So
why is that? Is it a pipeline issue or what?
Yes, it's essentially been the pipeline issue. So federal government had actually at some point they began constructing the OB3 pipeline, which is supposed to actually connect the east to the west. But unfortunately, it has suffered several setbacks. But we are hopeful that within the next 1 year, they will achieve completion. So, and these are one of the things that Seplat has actually foreseen and they are taking advantage of. Because once that comes on stream, they will be able to effectively take advantage of that pipeline to be able to supply.
Yeah, let's continue. I'm sure there's a lot more in the pipeline to discuss. Let's keep that for another day.
All right.
Adioluwa, which is a member of the investment research team at Afrinvest. Let's get back into the marketplace on Market Street after the break in 2 minutes.